Trading Halt, what are you expecting to see when they do resume trade today?
Well, if we have a look at how Leighton shares have been trading in 2012 so far, they've been trading extremely well. We've seen the shares up by 24% in the year to date, and there has been some optimism around the contract wins that they have seen over the last couple of months. But it is their legacy contracts which are still a problem with the Victorian desalination plant as well as the airport link. So we have seen a big shift to their full year expectations from $600 million to $650 million now down to $400 million to $450 million. So that's a cut of between 25 to 38%. So we're going to see a big reaction in terms of Leighton shares. We have a look at how the share price has done over the last 52 weeks. This is what Leighton share price looks like. And you can see that big drop off today, but back in December, January, the shares were around the $19 mark. But the shares before they went in trading halt around that $24 mark. So we will see a big drop off in Leighton shares today. If we have a look at expectations in the market, it was that these contract wins would continue and that Leighton's was a turnaround story, perhaps increasing margins. But of course now confidence has been shattered and that takes time to rebuild. So the optimism over the new contracts, perhaps over new contract wins, really dampened by this profit downgrade coming through for the half year as well as the full year in terms of a couple of its contracts which are due to end this year.
Then today, so no surprises, the stock sitting down close to 3% at this point. What's your outlook for the company now that it's finalised or completed its raising?
Beach is trading ex-entitlement today, so it has it is without that entitlement or access to that 1 for 8 issue at $1.40. But buying into Beach at this stage is really buying into that unconventional gas story. It's raising these funds, $345 million in total, to fund capital expenditure, mainly in the Cooper Basin over the next 2 to 3 years, as well as working capital. So really looking at being a first mover in this shale gas space in Queensland, and buying into this story is really quite an unproven strategy in that Queensland space. I guess Beach looking to be that first mover in the shale gas space and the unconventional gas space, but really it's raised those funds now to explore this further for the next 2 to 3 years, and buying into that is buying into that story. So Beach Petroleum are down by 2.6%, but that's really because it's trading ex-entitlement today.
So far today, and what we're seeing on the market, the benchmark off around 0.1%. What are you expecting for the rest of the session?
I think the fact that we face the end of the quarter at the end of the week should act as a buffer for the Australian market against some of the offshore losses that we saw overnight. Yesterday was an extremely positive one in Australia, where we saw the Australian market up by 1%, while the Asian market sold off and risk assets sold off. And if we have a look at what that was driven by, it looks like it was mostly window dressing by money managers, because while the ASX 200 was up by 1%, the small ordinaries index was only up by 0.2%, showing that the buying was really on the big end of town and money managers really don't dabble in the small caps on the Aussie share market. So all up, that end of quarter window dressing should help act as a buffer against the Australian market. Of course, one of the things that we're going to be watching for next week is really China, because yesterday we saw the Shanghai Composite down by 2.7%, and that's one of the things that had a negative impact on the US session as well as on commodities. So we'll be watching the Chinese market today, but all up, if we have a look at what sold off in the US, it was the energy, the material sectors which led the game, but that was offset by a gain in financials. So we could see those banks once again outperforming on the Aussie market. The energy sector, though, should come under quite a bit of pressure. Oil prices down overnight. Those US inventory numbers really quite shocking, 3 times what the market expected. So it does look like stockpiles there quite strong, and oil prices down sharply lower. So that energy sector will definitely be in focus.